Welcome back to Market on Close. Let's get technical. Let's talk some trading ideas. Gareth Soloway is the Chief Market Strategist at Verified Investing. Gareth, afternoon. Let's talk some earnings. How you doing, sir?
I'm good. How are you?
I'm getting psyched. We got some fun names. This isn't like the juiciest week, but Tesla's always fun. And GM right next to it. They're very different companies, and they're very similar companies in some way. Let's talk Tesla first here. What's your expectation? What do you think of the chart?
Yeah, so interestingly enough, it's trading within this wedge pattern. And wedge patterns tell us that there's been a lot of price chop sideways, and it's kind of narrowing tighter and tighter and tighter. And when you break out of a wedge, it's either explosive to the upside or the downside. So as a technician, I look at kind of the shorter term price action to see what's going on. And as we know, we saw a dip recently on the robo-taxi unveiling, the little bit of disappointment, and it's trading in what we would refer to as a bear flag. Sideways chop, which is telling you buyers are meeting sellers and there's kind of a void of price action. That tells us the probability favors a downside move on earnings. And if you break that parallel, that upsloping trend line, you're likely going to see a move down towards 205 to 200.
Okay, so right now we're holding it, but if, then we get into some trouble. So what's interesting is that it seems if we break to the downside, then you open up that trap door in a pretty big way. But even if we stay within this pattern that you've got, there's some pretty big upside too, potentially, even just to stay in the pattern. So should we just be like trading vol on this, or is that risky with Tesla where there's pretty much high implied vol all the time?
Yeah, and I think that's the biggest risk here is that there's that high volatility potential. For instance, if let's just say they do surprise and the bear flag doesn't play out, the upside is to about 239, which would be basically the gap fill from when it dropped on that robo-taxi unveiling, really where this bear flag started. So it is a risky play here. There's no doubt about it. Probability slightly favors that downside move. Personally, am I going to jump in on this? I'm going to stay on the sidelines. I don't like that much risk. Like you're saying, it is very, very risky. But again, it would favor the downside based on pure probability.
Okay. Okay, I like that description. Now, GM, which actually is inferior in its car fundamentals when it comes to like margins and stuff, at least it's a very straightforward company, and the market seems to like that more than trying to figure out robo-taxi timelines and such. But it hasn't been able to crack this $50 level. Gareth, what's up with that?
Yeah, and you're right. That's been a great resistance level. It aligns perfectly with this even number on GM. And I would continue to look for that to be major resistance. And as long as it doesn't get through that level, you would favor that downside to that lower trend line that you can see on the screen there, which would be right around that $44, $45 zone. So again, this would favor the downside here. We can see that in general, GM's performed relatively well compared to some of the other automakers like Ford. But the question is, can that continue? And we're going to see later this week whether or not they have the numbers to back up the recent move up, which again, it's gone from about $26 a share that was back in November of 2023. So basically 1 year ago, it's almost doubled. In fact, it has doubled in price, but they're going to have to back it up. And right here, you have to respect resistance until proven otherwise. So as long as it stays below 50, it's a sell short here.
Okay. And then it's kind of in some ways like the Tesla chart, but instead of a downtrend kind of being the dominant situation, you've got more of an uptrend. So are you in the same way that if Tesla, slips out of it, we break out big to the downside? If GM does get through 50, is it worth chasing for a breakout?
I actually think it is. In that situation, it would be a multi-hit breakout. So you can see how many times you hit that upper trend line there. What that tells us is that if it finally gets through, it's almost like a jailbreak where everything just rushes through that open, like a dam breaking, all the water rushes through, and you'd likely see a move up. My guess is towards 55 to the upside. So again, in this situation, if you did go short, you would want to use a tight stop there. If it gets above 50, you stop out, take a small loss, and you look for that move to the upside, maybe even flipping it around into a long trade.
Okay. And I guess in some ways, Tesla still has got those higher lows, so you should be careful. Maybe not technically a downtrend, but just more kind of stuck on the upside.
Yeah, and one of the tricky things with Tesla too is that you have the earnings report, and then you also have any comments from Elon Musk that can come afterwards. So if you get a move on earnings, and then he decides to say something very engaging to the audience, the investor audience, it could totally change the after hours. And so, as you were saying, Tesla definitely carries a lot more risk. If I'm a trader of Tesla in general, I'm doing smaller share size because it's a much larger volatile move that should be expected.
Okay. This week on earnings, you're also watching T-Mobile. Let's talk about it for a sec. This thing is gone ballistic, and that's after already being a pretty good trade in the last couple of years relative to its competitors. Is this just a straight long, or are you going to fade it?
No, this one to me, actually, of all three that we've talked about, this is the one where I would favor the downside the most. And if you look at this volatile move, it is just so engaging to the upside. It's had so much upside. If you even look over the last couple of weeks, it's been vertical to the upside. And so these type of moves, essentially what it's doing is investors are pricing in a beat on earnings and revenue and solid guidance. And so it now has to not only beat earnings, basically beat revenue, but also raise guidance. And if it doesn't raise guidance enough, there's this downside sell the news impact, right? So it's very much like Apple debuting a new iPhone. Everyone's expecting so much that it opens the door much, much wider that they might disappoint. And even if they do beat, the price of the stock is already reflecting that, and you'll see us sell the news as well. So I would favor, again, off this 224, 223 level, a move back down to maybe about the 208 level on earnings or the day after earnings.
All right, bold. Going after a flyer, taking a shot. I like it. Hey, Gareth, there's tradition. Give me your 40-second Bitcoin take here. Was the breakout real, or are we just testing it still?
So I think the breakout was done to kind of lure people into the long side. Now, as we know, these algos love to mess around with people. So they coaxed people in on the breakout above 68. Now they're going to flush them out back to about 65. And then I think you take that and you buy that 65 pullback. So again, the market is like this, right? It tries to get the most people on one side and then flush them out, and then the most people on the other side. So it's going to make us doubt a pullback or the fact that it was a breakout by pulling back here over the next few days. I think you actually lean into that and buy Bitcoin here for a breakout of the parallel channel. But again, don't be surprised if it flips back to about 65,000 first before that next move up.
All right. Fun one. Okay. Thanks, Gareth.